I see many funds offered in my 401k, but I don't know how to choose the right funds for me. Are you one of those? This episode will help you to choose the right funds for you. Hello everyone, I am Vijay Mohan and you are watching Investment Insights. Let's say that you are a conservative investor. By conservative, I mean you do not like much volatility in your portfolio, but can take reasonable risk for relatively stable returns. Then you can choose a target retirement fund. Almost all 401k plans today offer target retirement funds. It works like this. When are you planning to retire? Let's say 2040. Then you would choose the 2040 target retirement fund. What they do is they adjust the stocks and bond allocation every year so that when you are close to your retirement, you have more bond allocation. What happens when the bond allocation is more? It reduces the volatility of your portfolio. Your portfolio won't jump up and down like crazy. You don't want that when you are close to your retirement, do you? So a target retirement fund starts with more equity allocation, but as it approaches its target year of retirement, it ramps down the equity allocation and increases the bond allocation. What you are seeing here is how Vanguard allocates between stocks and bonds in their target retirement funds. They have divided it into 4 different phases. In the first early career phase, they have a constant 90% allocation to stocks and 10% to bonds. This phase ends when you are 40. In the second transition phase, they start increasing the bonds allocation and reduce stocks allocation every year until you are 65. At the age of 65, you will have 50-50 allocation between stocks and bonds. And in the last withdrawal phase, they settle down for a 30% stocks and 70% bonds allocation. During the early career phase, you can expect an average annual return of 8 to 9%. But this return will start going down as the stock allocation goes down every year. So after 72, an average return of 3 to 4% is a reasonable expectation. By default, everyone should be actually going for this target retirement fund. If you are 40 now, you will be 65 by 2050. Just allocate 100% of your 401k to a 2050 target retirement fund. That is all. Keep it really simple. But let's say that you are a moderate investor who has a very good understanding of stock market and totally acknowledge its risks. Then you can consider allocating 100% to one equity index fund. A S&P 500 index or a total stock market index would be a good choice. If you do not know anything about an index fund, watch the index fund and risks in index fund episodes in this channel. So just consider a S&P 500 index fund or a total stock market index fund. You do not really need anything else. We can expect 8 to 10% return on average from both of these funds. What about international exposure? If you look at the top 10 companies in S&P 500 like Google, Microsoft, Meta, Nvidia, they all have international exposure. A separate exposure to international stocks is not really needed. But if you feel S&P 500 is not good enough for international exposure, then sure, you can add a 20% exposure to non-US international stock index. How about sector funds? There is no need for individual sector exposure, as S&P 500 itself is well diversified with the exposure to all the sectors. But if you feel very strong about a sector's future, then sure, you can have some allocation of that sector. But like I said before, it is not really needed. So if you are a conservative investor, you can just choose a target retirement fund. If you are a moderate investor, you can go for 100% S&P 500 index or total stock market index. But what if you are an aggressive investor? If you are an aggressive investor, you would already know which funds to invest. If you do not, then you should not be taking an aggressive stance in the first place. Stick to moderate theme and invest in S&P 500 index or total stock market index. Hope this helps to choose the right funds for your 401k. We will look into IRAs in our next episode. See you all soon.